Hello everyone, it is Evan from the Trade Risk here on Saturday, December 12th with a weekend market recap. We are first going to analyze the current market environment. We're going to look at some other markets, leading and lagging sectors, individual names, and then we're going to look at some trade ideas both on the long and short side heading into next week. Now, there's a lot to cover. We'll jump right into the action. The Bears came out with a victory this week, a 2% down session on Friday in the S&P 500, and we closed down almost 4%, 3.7% in the SPY ETF for the week. So if we go to a daily chart first, let's take a look at some of the levels and where we've come from. We are now back at this prior pivot low that we made back in November. So right here, right at this 202 level that we had the strong kind of bullish engulfing bar back on the 16th of November is where the market is right now. This is also where we found some support in mid-October as we were sort of in that nice, neat uptrend higher. So the market's at an interesting spot right now. It's technically oversold on some metrics depending on what you're looking at. Not deeply oversold, but it is starting to get to a place where maybe we could look for a bounce. But what's concerning and why I'm not really looking for a bounce just yet is this gap down that we just had on Friday. I think if this is actually going to be some type of breakaway gap to the downside, we could have a little more unwind happen here, especially towards the end of the year. Volume can be lighter and markets can move a little quicker, especially if there's a big unwind and then there's a big rush to the exit doors. If not everybody's in their trading desks or at their seats at this time of the year, sometimes markets can move pretty quick. So we want to be careful here. I'm not looking to step in and buy this dip. I don't see any reason to just yet. I mean, we are at an area of interest, but I really don't like the picture here. I don't like how we just lost multi-day support down here around 205. You can see some of the tails down here that we made as it held for a few tests. But we did have clues ahead of this. I think last Wednesday when I did my midweek market video, it was on this session right here, and I ended my thoughts on the SPY on the market on a cautionary note, saying that Wednesday was a day to take notice. And I think Wednesday was a day to take notice because of the extreme volatility we saw, a very wide-ranging day, and also that fade off of the highs was really telling. We really shouldn't, on a really healthy kind of bull market, bull trend, bullish consolidation, you typically aren't going to see those types of fades in that magnitude, and especially coming off a day that was, we already saw that to a lesser extent the day before. So the clues were sort of stacking up here, and then again on Thursday, again, you could still see that we faded off those highs. So there were some signs there that the buyers just couldn't keep that momentum up. We weren't closing on the lows, but we certainly couldn't get a strong close here at all. The fast-moving averages are racing lower, so I would be very cautious now, and we've been slowly unwinding exposure as far as our portfolio goes. Members and I have been slowly winding down our portfolio exposure in here. We managed to take a nice long position in the UVXY on Thursday, which really exploded here on Friday. We didn't get to capture it. We sold most of it right near the open. Very happy to lock in a 13% overnight gain, but as it happened, this closed up 30%. So a big reach for volatility there, and I think you still just need to be cautious here. We have a busy week coming up with the Fed, the potential rate hike, and perhaps the market's just squaring away before that. Maybe we do see a bounce from here and a strong bounce into the end of the year, but certainly not something that I'm willing to go out on a ledge and place a bet for. I think right now, especially for us, we're really light. We just have two names on that are long-term holds for us, and I'm very comfortable there with 10% exposed to the market. I don't really think it deserves a whole lot more. The short side, potentially a little long in the tooth here if you're still kind of pressing shorts. Again, I think the unwind and Monday could lead to another gap lower, and I think we can move very quickly here into year end for sure. But again, it just doesn't seem like the best place to sort of initiate new shorts. And then finally, my last thoughts on the SPY. Go back to a weekly chart here, and again, it's too early to say this, but to say this with any type of confirmation or prediction at all. But again, you'd have to wonder, is this going to be some type of lower high that we just made here? If we start to break below 202 and sink back into this range, are we in the midst of some type of topping pattern? We just put in a lower high here, maybe some interesting looking head and shoulders pattern, depending on how you want to draw it. It doesn't really matter, but you start to think about those things, especially as December typically is a seasonally bullish time in the stock market. So that's enough with the SPY. Let's move into the IWM. Again, nothing bullish here at all. We're back below multiple layers of resistance, and the market here, the small caps are racing lower. It's below now this band of support that held in here for a few months, right around 113. So this is certainly a market that's in trouble right now. Would not want to be long this. Even on a weekly chart, it almost looks like an actionable short right here, as it's breaking down from potentially this bear flag that it's been forming in for the past 4 months. So small caps, again, not something I'd want to try and buy right here. It's got a lot to prove if this trend is going to change. We were looking at this as some type of bullish upside resolve last few weeks. Clearly that has reversed, and we've been slowly sort of changing our opinion on that as this downtrend has unfolded. So that's an avoid for us. The Qs, again, rolling over here, it's snapping this support right in here, right around 112.50, 113. So it's back below here. Perhaps it put in some type of rounded double top here. And again, it's not as it's not at the lower support line like the SPY is, but 109, this pivot low from mid-November, again, is sort of the next level of interest. So it's still holding up the best out of all of them, but still a bit of a cause of concern here, especially with the action on Friday. Now, if we look at some other markets, TLT caught a really nice bid into Friday, and you have to wonder, is the Fed going to be raising rates? I mean, you shouldn't really be seeing bond prices rise. If that were the case, you'd expect them to start heading the other direction. You'd expect them to start trading lower if rates are indeed going to rise. Again, we'll have to see how that all pans out. It is coming back up to 125 or so, which is our resistance area that it's failed at, made slightly lower highs here from, if you factor in the highs from August, then a lower high here in October. It's now heading back up to challenge it. Perhaps we do break out on the TLT. I'm sure this will be a very volatile spot come next week. USO continues to get beat up, and a lot of pressure here, of course, as commodities get hit all over the place, putting a lot of pressure naturally on the energy sector and with the SPY in general. So USO continues to be in this downtrend. It broke below its August lows here at 1230. It's pretty sharply, it's mildly to sharply oversold here. Perhaps we get some type of bounce, but again, certainly nothing that I would be interested in playing on the long side. It's just trying to catch a falling knife at this point, with no signs that this is going to stop anytime soon, especially into year end. If there's funds and just some of the guys out there that want to liquidate this position heading into the end of the year, I would just want to avoid it. Tax selling, all that good stuff. UNG, very similar story here. Continues to be in its downtrend, below all the fast-moving averages. I mean, congratulations to anyone who's been repeatedly shorting this. It's just been no evidence that you should be trying to get long natural gas at all. It's failed to take out resistance, ever since September or August of earlier in this year. So that's natural gas. Gold, the metals, starting to get a little bit of a bid here, trying to put in this base right underneath some pretty major support, or what was support. We've got to get back above 104, turn around some of these fast-moving averages. Could get a little more constructive on gold. We've been talking about that. Maybe this turns into some type of false breakdown here. Still, though, you got to be very careful. It's in long-term downtrend, so you got to give the benefit of the doubt to the bears still in the metals. Silver, similar situation, although this one did face a pretty large gap down on Friday. It did close strongly near the highs, but still a lot of damage. It's below all of this supply here. Got to be really careful. You need to get back above 13 3/4 or so to start getting a little more constructive in this. So I'd be careful here in the metals. Now, if we go to individual sectors, honestly, everything's getting beaten up pretty well. So I'm going to talk about two sectors that stand out to me on the long side. XLV, healthcare is actually the first of them, and it certainly looks toppy here, and it looks vulnerable to sort of rolling over. So I certainly don't think this is a screaming long by any stretch of the imagination. But on a relative sense, healthcare is holding up reasonable compared to a lot of these other names or a lot of these other sectors out there. So keep an eye on this. I would not be interested unless it's back above 71, 75. But the focus of sector analysis is really for individual trade ideas within the sector. So keep an eye on these guys. It hasn't quite rolled over yet, so let's see how they act heading into next week, especially if we do see some type of relief bounce in the market. This is where you want to take a look at some of these leading and lagging sectors. And again, it's on a relative basis. I still think you need to be careful here on the long side. And the only other sector that stands out, a little bit here on a relative basis is the staples. It is now, you got to be careful because it is getting back below this $50 level, back below 49.75, so in this prior range that we were in 2015. But the formation and where this is relative to, say, energy, which is just getting killed, pretty much pick everything else out there. Everything's starting to roll over pretty hard. So the fact that we have some of the placement up here near the highs is still constructive on a relative basis. So those are the two standout sectors that I see looking at it this weekend. If we get into some individual names, we'll go through them pretty quick. Apple's looking like it just wants to roll over here. Google, very similar situation. Finally starting to see some signs of cracking, some signs of reversing this trend and topping out. You can see the fast-moving averages curling over a little bit, broke below 763. I think it's very healthy for some of these names to pull back a little bit. So Google's starting to turn down a little bit. Amazon breaking down pretty convincingly back below this support around 660. Netflix coming down as well, going to be coming into this breakout area right around 116 or so. Facebook breaking down from some pretty clear support down here at 103.70. Twitter actually had a pretty impressive day on Thursday. Unfortunately, it did give 3/4 of it back on Friday, so it's still very close here. It did recoup that $25 support level on Thursday. It's now right at this sort of gray area right here. We definitely want to see it hold 24 and a quarter to stay, at least somewhat neutral on the name. But it was encouraging to see a couple of these large green expansion bars here. So you got your first one on Tuesday, a bit of a pause on Wednesday, another big thrust higher on Thursday. So it looks like maybe we're seeing some signs of support coming in here. We'll have to keep that one on watch. GoPro also had a really nice snapback here on Thursday, 11.5%. It's amazing. 11.5% move looks like a 1% up day because this thing's been so crushed. It's still not even above the 20-period EMA, and in fact, the EMA is still racing lower the 20 period. So that tells you how much selling pressure has been in this name. But the difference between this and Twitter is Friday it held up and actually continued to march higher here, gained 1.7% on the day, while most of the market was down 2% in the indices. So a really constructive sign there. Maybe we see continued squeeze here into the year end in GoPro. And then finally Alibaba, this one cracking down after it was holding up pretty nice. And then Tesla also breaking back down into this range here. So that's those are some of the individual names I wanted to run through. If we look at some setups heading into next week, we'll start on the short side. SYMC, this one here has been in a downtrend since May, and then since September, it's been basing out here, looking pretty weak. It had an attempt in October to kind of thrust off of these lows, and it did go sideways, and then it failed, gave it back up, and now it's back down to this very critical 1950 level. So you get a nice base that formed in this long-term downtrend. So I'd be interested in shorting this below 1940 or so, lose these lows, and you could see this downtrend resume. So keep that one on watch. The other short setup setup I have is MRKT. This isn't really my cup of tea, but when I was going through my scans, I know some people like these head and shoulders topping patterns. Probably not something I would get too involved in, but it is pretty clean, so I figured I'd throw it in here. If you start to break below 28.50 or so, looks like this is a pretty actionable short. It's a relatively recent name, hasn't been traded public too long, late 2014, so that's a setup for those of you who like these sort of topping patterns. Next setup on the long side is TRIP. And this has held up pretty well. It's not ready yet, but you can see it is still clinging on to this 20-period EMA, so it is showing some relative strength. It's got a nice tight base here, very clear line of resistance right around 84.25. If this can start to break up on a market relief rally next week, or early to late next week, I'd be interested in this on the long side. I think that one's an interesting name. And then finally, AVT. Another name on the long side. You got to expand your horizon a little bit here on a weekly chart. This thing's still holding up really nice, even a monthly chart. I love this base here at the highs. So again, more of a longer term play. It's not ready just yet, but if you can start to get back above $46, I would be interested in this on the long side. And my favorite setup, I should have mentioned this earlier, will be going out my newsletter. So sign up for free to the newsletter down here, or nope, that's the YouTube channel. You can do that as well. The newsletter, thetraderisk.com/join. Get on the newsletter. That's my favorite long idea, which is holding up really nice. I'll be publishing that on Sunday in the newsletter. So as always, thank you for watching. Hope you enjoyed the video, and I will catch you next time.